Hey everyone, Sean Devon with Douglas Elliman. Welcome back to How's the Market, the first episode of the 2020s. December of 2019 was an encouraging month for a few different reasons. One, we saw contracts signed both in resales and in new development really strong, over double-digit growth in both of those in terms of contracts signed. In resales in particular, almost every single segment of the market did really well, with the exception being Upper West Side between $1 and $5 million. For new development, it was a little bit more spotty. Over 18% increase in contracts signed overall in new development, but there were some segments of that market that really did struggle a lot. Looking at supply, and we'll talk about supply in a little bit more depth, we're going to talk about it in historical context because I think it's really important, and that's why this is most encouraging for this month. In December 2019, we saw an increase in supply of about 3.4%. That is the fourth month in a row that we've seen the increase in supply be less than 10%. That's really important because if you look at, for example, December of 2018, we saw an increase in supply of over 30%. That was not a lone incident. We saw many, many months after that where we were up by over 30%, over 20%. Why is this important? This number of where we were in December 2019 of 4,800 units is a really, really high number. I'll include at the back end of this video a chart that shows how cyclical the market is in terms of supply. It's cyclical in a lot of different ways. Supply is no different. The low point of supply in any given year is usually December. The high point in any given year is usually May. So we're going to look at that, and we're going to look at what the numbers that we had for this year look like as compared to years past. So in December 2019, we were at 4,800 units. In May of 2019, we're at about 6,500 units. The last time we saw numbers like that were in December and May of 2011, respectively. Looking at, and for further context, in 2015, in 2016, again, the last time that we were in a market that most would agree was a seller's market, the supply for those, the low point in December of those years was about 3,000 units, and actually a little bit below that sometimes. So around 3,000 units as compared to where we are now, 4,800 units. And the high point for those markets, in May of those years, we were seeing supply anywhere between 3,500 and 4,500 units. So again, comparing our low and high point, our low point is 4,800 units for this year. Our high point was about 6,500 units for the year. So very different than the numbers that we had in those 2015, 2016 years. Why is that important? It's important for lots of reasons, probably most simply because if buyers feel like they have lots and lots of options, they're not going to move very quickly to pursue a property. They're not going to move very aggressively to pursue a property. And that's why the properties that are seen and understood to be unique are doing particularly well. But seen as replaceable, they are waiting and they are either negotiating heavily or they're pursuing other units that they feel they can negotiate heavily on. Take a look at the tables that follow. Take a look at the chart that follows that. Let me know if you have any questions, and no matter what, have a great day. Bye.